Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the latest buzz on the D Street. Well, as we kickstart a fresh and new week in the January month, the first month of the calendar year 2026, the focus is now turning on all the cues that are coming in right ahead of the Q3 results. We will be focusing on some of those cues today. We will also be focusing on how banks are continuing to be the top theme that brokerage houses are betting big on. Whether it's the PSU banks or the private sector banks, it is the banking and the financial space that has so far been the biggest performing sector, major sector as far as 2025 is concerned, and how that is continuing to garner the attention of top global brokerage houses too. Now, apart from this, we will also be focusing on how the IPO rush is soon going to get gripping on the D Street as well. We are already seeing the first IPO and the kind of information that's coming from Bharat Coking Coal. Remember, this is the IPO of Coal India's subsidiary. The company has already now fixed the prices for this IPO, and this will be the first one that you should be watching out for as the new year has kicked in as well. And we will be focusing on that, all of that as well. Remember, just in the last week, in the initial days of January 2026, we did see a lot of record high levels being seen, be it the Nifty and the Nifty Bank. Now, we are also focusing on how the market capitalization of all the BSE related stocks has now hit a record high as well. So, the sentiment is definitely kickstarting on a positive note. You do see some profit taking right now after those record highs that have seen in the morning trading session as well, although we are still holding at 26,300 odd mark at this point in time. So let's look at welcoming our guest on board. Gaurav Sharma is now joining in to share with us a perspective on the markets and of course to share with us all of these insights that we will be discussing today. And he's joining in from Globe Capital. Warm welcome to you, Gaurav. Good morning to you. Good to have you with us as always. Let's kickstart with your fresh and new take on the markets now. After seeing those record high levels in the last week on Friday on the Nifty Bank, and now finally seeing some stepping up in the sentiments that we have been looking at lying low for large part of the last 3 months odd. What is the fresh take on the markets?
Hi, good morning, Sakshi. Good morning to all the viewers. It is a dull start for the week, but I don't think this particular dull momentum will last for any long. We are pretty much optimistic on the markets. Bank Nifty is starting gearing up, and I think it has a role to play. It will lead the markets higher. As we speak, I think we are almost trading on a flattish note heading towards the color green. So I think there is a lot more to expect from the markets. 26,500, 26,700 is pretty much on the cards. This is likely to be tested this week itself. So I think any dip that comes in should be utilized as a buying opportunities. As I've already mentioned, that Bank Nifty will be the catalyst of this up move. Metals have already performed well. They are continuing their up move, and so are auto index. So I think these are the top three indices that one should keep on the traders' radar.
Okay, got that. So that's as far as the markets are concerned. Let's first talk about the IPO rush as well that is soon going to be in our focus. Bharat Coking Coal is the first one that's actually started to talk about how on January 9th will be its opening and Tuesday, January 13th is when the IPO will close. The price band is just about 21 to 23 rupees odd. The market cap is 10,700 odd crore rupees. There is a lot size of 600 shares. This is of course a pure offer for sale where Coal India will be divesting a part of its stake in the IPO. But for the first time ever, Coal India subsidiary now coming in. How big is this as an opportunity for all those investors who've been looking at Coal India as a part of core portfolio for many years as a pure dividend play, and now they have an opportunity to look at the subsidiary as well?
Yes, absolutely. I think of late, this is a very, PSU company which is coming up with their IPO subsidiary of Coal India, and I think we have seen a reasonable up move in the share price of Coal India of late. It just started its up move from 385 odd levels. Today itself traded at a high of what, 435, 436, currently trading on a flattish mode. So Bharat Coal, reasonably priced IPO 21 to 23 is the price band. It's an offer for sale issue. I think it is something one can subscribe at. And yes, you have rightly mentioned that for a very long time, investors have been just looking and investing into Coal India merely for the dividend income which the company was, and I think this is the time when PSUs are also gearing up. For the year or so, I think it's been about year and a half now that the public sector companies have not performed that well, barring PSU banks and some others. So this is the time when we could see some traction within the PS public sector enterprises. Coal India and the newly getting listed subsidiary would catch some reasonable attraction.
Okay, fair point. So keep an eye, of course, as we move forward today. Also, you will get to hear from the management, which will make its appearance as well. There's a press conference lined up, and we will also be getting exclusively to talk to the management of BCCL about more details on the IPO and, of course, the vision going forward. Next couple of days, we will focus on then, and 9th is when the IPO truly opens up. Let's focus on the secondary markets and find out where the action is truly. And we've been focusing a lot on PSU banks in the last part of 2025 and again in the beginning of 2026. This seems to be the flavor. As we see a lot of brokerage houses now come out with their reports on the PSU banks. We have Morgan Stanley report on PNB. Which have a target of 100 rupees, although they believe there could be a 20% downside from here. Citi has a 108 kind of a target of 14% downside here, but UBS has a 122 rupees target. They believe the loan growth is steady, deposits are steady, NIM trend is likely to be the key monitorable that they will be watching out for. Morgan Stanley also has a report on Bank of India with an underweight target here again with a target price of 120 there. On Union Bank, UBS has a neutral rating and a target price of 150. They believe the loan growth has accelerated in Q3 and the cash deposits ratio also has expanded by 400 basis points. They've also mentioned that NIM outlook remains key to watch. Of course, that is one monitorable that all the brokerage houses are keeping a keen eye out on. Morgan Stanley also came out with a report on Bank of Baroda today, an underweight call here with a target price of 255 rupees. They do believe that the Q3 update definitely shows strong loan growth there, and that's something that they are betting big on. So let's try and understand what's in focus as far as the PSU banks are concerned. Of course, some of the Q3 business updates are coming in, that's why the brokerage houses are stepping up the focus there. What's your sense here?
I think your last point actually is the most important one, the business updates. So there are, reasonable numbers coming in for the PSU banks, which have, if from a year's perspective, if you look at 2025 was reasonably well for the PSU banks, they have went up and performed pretty much well from a rise of 30 to ranging from 30 to 40%. The larger ones I'm talking about, the PNB, the Bank Baroda, the Canara Bank for that matter, SBI has also performed reasonably well. They remain on our buying radar. We have been maintaining a bullish view on this space from quite some time now, and the same we have suggested to our clients. So I want to make a general disclaimer also that our clients could have a position in these stocks. We do maintain a healthy expect that a healthy up move is likely to continue going forward into 2026 as well. I think by the later half we would see a lot of more buying interest coming into this space, and this phase, the government is focusing on merging up smaller public sector banks with the larger ones. I think by the year end or so, we should be left out with about just 5 to 6 of the larger banks will actually remain solely in the markets. So this is a positive. This will actually lead to a larger loan book and the larger book for these banks, as mostly the books are clean now. So I think the valuations are pretty much justified. Rather they are reasonably cheap. So all in all, they are a good bet.
Let's also talk about some of the private sector banks there. That's also coming into focus. We have Morgan Stanley report on Yes Bank with an underweight rating and a target price of 17. They still believe loan growth lagging the system, and Q on Q growth has slowed to 2.9%. On RBL Bank, we have a Citi report with a buy rating and a target of 400 rupees, which implies a 25% upside from where the prices are at currently. They believe advances are up 2% sequentially, and they also believe that deposits are up 12% on a year-on-year basis, led by retail. And they also believe the LCR healthy growth can be seen at 125%, and the ROA is also seen improving to 1% by Q4. That's what their expectation is. From the finance space, on the AU Small Finance Bank, also Jefferies has a report with a buy rating and a target price of 940 rupees. They believe the AUM growth has definitely improved in Q3. The unsecured loan drag is also finally easing for the bank. And for FY26, the growth is now pegged at 20%. So let's try and understand on the private banks and the small finance banks as to how do we look at that aspect as well in Q3 and beyond.
Actually, of late, the smaller private sector banks are among the less talked about segment, and they have performed exceptionally well. Karur Vysya, City Union, AU Small Finance Bank, RBL Bank, they are among the better ones. Still, Equitas and Bandhan are underperforming, and I think a couple of more quarterly review numbers is much needed to actually take a wise call on it. Other than that, we remain bullish on all the four I've mentioned. So I think any dip coming in from in this space should be considered a buying opportunity for Karur Vysya, City Union, AU Small Finance, the RBL Bank, among the smaller private sector banking space.
Right. Let's also talk about the biggest names in the finance space. Bajaj Finance also on the radar of brokerage houses today. Morgan Stanley has a report with an overweight target here, rating here, and the target of 1195. They again believe that AUM growth, although has moderated, as was guided before by the company, the FY26 customer additions are seen above 18 million. That's a positive. Jefferies has a buy rating, a target price of even higher at 1270 for Bajaj Finance. They believe AUM growth has eased to 22%. Festive season timing has definitely impacted some disbursements, and that's been a key to watch. But going forward, they still have a bullish outlook. On Bajaj Twins and especially on Bajaj Finance, what's your expectation for the year 2026?
Again, you have wisely pointed out the biggest thing here, the festive season
Yeah.
with a lowering interest rates, both playing in well for Bajaj Finance. You have also stated that the numbers have improved, the customer base has improved. So I think all this in total indicates that better numbers will be reported this quarter. Therefore, that will lead the up move, and the price target that international brokerage have come up with, close to 1100. I think it is pretty much possible.
Okay, let's also take now a view on the other companies beyond banking and finance that have come on the brokerage house's radar, and that's amidst the Q3 business updates. So let's talk about FMCG and retail space there, and consumption oriented themes that we must also track. Remember, this is one theme that has been in focus since the time GST rationalization was seen in the last week of September up until now, all through the festive season, and Q3 will be important to be seen as to what could be the signs from there. Let's talk about first Marico, which is on the radar of Nuvama and Morgan Stanley. Now, Nuvama believes that they have kept the rating as buy for Marico, a target price of 865, implying about a 14% upside from where we are at. On the Q3 updates, the revenue and the margins have beaten their estimates. The volume growth is at 8% year on year. Food space remains benign. Parachute volumes, however, are slightly down. They also believe that the international business has outperformed, and there is a strong sequential improvement in the overall numbers, as has been indicated by the Q3 update there. So let's talk about the FMCG space first. As has been indicated by Marico, how should one be viewing this? Again, this has been a large laggard of a space in 2025. Are things finally turning for the better in the new year?
Well, rightly picked up. FMCG has been laggard. I think it's been year and a half. A larger chunk of the FMCG stocks have underperformed. it is very important to be really stock specific when dealing with FMCGs now. You are mentioning Marico. The past 2 quarters for Marico have been phenomenal, both in terms of top line as well as bottom line. This company has surprised the street, and I think that will actually pave way for a further move. If in the third consecutive quarter it is able to maintain such a high growth, I think it is set for much higher targets now. Apart from that, Dabur has also geared up pretty well in the recent past, and I think considering both are at similar valuation, if Dabur too reasonably matches up with a similar pace in the past 2 quarters with the upcoming 1 or 2 quarters, I think this stock is also set for a good up move. Therefore, Dabur and Marico would probably lead the way for a reasonable up move within the FMCG space.
Let me also pull in from the retail space DMart right here, because that also indicates a large part of the consumption story. Again, we have two reports here that we are referring to. One is Morgan Stanley's report on DMart, which has an over equal weight rating on DMart, a target price of 4,522, implying about a 20-22% upside from the current levels for DMart. The Q3 FY26 growth, however, has been the weakest for the company since Q3 of FY21. Now, they believe the sequential slowdown has been consistently seen since Q3 of FY25 as well. There is a 3-year CAGR growth at 15.9% versus 20% earlier. The triple SG growth is also seen flat to low single digits at this point, and that's a key concern. Citi says that they still will maintain a sell rating on DMart with a target price of 3,250. Here they believe there could be a further 13% downside on the company. They believe Q3 revenue growth is lowest in the 20 quarters, same as what Morgan Stanley has pointed out. The quick commerce competition is impacting growth, and that's what they have clearly highlighted. Weak demand, smaller town expansions are weighing on. EBITDA margins have fallen year on year in 11 of the last quarters, and that continues to be a concern for them. How would you look at DMart? We have seen all through 2025 the big question mark on whether DMart is going to be quick enough to dip its feet as well in the quick commerce space, but it hasn't yet made that foray. Whereas on the other end, we are seeing even global giants, Amazon, Flipkart, now kick-starting their journey in the quick commerce space, something that was started off by the Indian startup majors, and that has really climbed up in the whole space. How would you really look at DMart as an opportunity? It has been a wealth creator of the past, but these newer disruptions are weighing on.
Actually, we should maintain a little longer term view as far as DMart is concerned. It has performed exceptionally well in the past, not year, rather I would say years. So this kind of performance, outperformance, some or the other way fades out or slows down with adding up competition. Quick commerce specifically coming in from Swiggy, Instamart, Blinkits. I think this is coming up to be a dent on the store operators like DMart. Therefore, the kind of profit taking that we have seen is a result of that. As far as financials and growth are concerned, still the company is able to post a reasonable growth, and healthy margins are also there. I think a level close to 3,400 is a very good level. Currently, the stock is at 36.55. Another 150 to 200 points decline from this level. One should start adding up to the portfolio. The stock will be, I don't see the stock falling below the 3,400, 3,300 levels anytime soon. So I think that is a good accumulation or adding up opportunity. So buy on dips is my view for DMart.
Okay, buy on dips is the call on DMart. Let's also in the same breath then talk about the, startup leaders in the quick commerce space, Zomato, Swiggy. Now, of course, Zepto is going to be in focus very soon once it starts its D Street journey. What exactly is your thought process here in the quick commerce space? What should be investors' approach here?
I think Eternal has already corrected reasonably.
Yeah.
If we simply go by the Fibonacci retracement theory, it is also available at a reasonable corrective price now. I don't see much of a fall from these level. 280 is currently where the stock is trading. I don't see it falling below 260, 255 zone anytime soon. So I think any further decline should be utilized as an adding opportunity. One can start accumulating even at current levels now. The stock was not far off trading above 350, 370 zone. zones, and still people were buying around it. Now it is available at after a reasonable correction at 280. The numbers are reasonably well, so I think this should be considered. Swiggy on the other side is still underperforming. One of the most important thing is the stock. This company is still struggling with the profits. So I think I'll still go with Eternal.
You would still go with Eternal at this point in time. Fair point. Market breadth is improving again. Viewers 26,365. You can again see a 37, 38 point of a jump on the Nifty. Large part of the sectors have also pulled up in trade. It's the real estate pack that's now pulling up. Now up by over 1%. PSU banks, of course, in the thick of action, almost 1% higher. Autos, metals are also shining bright now. On the Nifty, if you look at the top gainers, you have Bharat Electronics, you have Maruti, you have Eicher Motors, you have Nestle, you have Tata Steel, Asian Paints. These are the top winners in trade right now. And when we look at the laggards, of course, there still is about 10-15 odd stocks which are in the lower end. IT stocks continue to be weak. Infosys, HCL Tech, Wipro, Tech Mahindra, that space continues to be weak. So let's actually talk about the weak space as well and find out what's happening in the IT space too. Of course, IT will be the first sector to start reporting its earnings in Q3 also, Gaurav. So how would you be really looking at the IT sector? We have a report from CLSA today which has downgraded HCL Tech, Tech Mahindra, although their mid-cap picks remain their top bets like Persistent and Coforge. Within the large caps, they still are bullish on, say, Infosys and Tech Mahindra. But Q3 growth estimates are likely to be cut, is what they believe. Persistent and Coforge are going to be leading the sequential growth, is what their belief is. Q3 numbers, IT sector, what would your approach be?
Sakshi, we have been maintaining a accumulation stance for IT companies. Specifically, we have shortlisted from the mid-cap space, Emphasis, Persistent and Coforge. Persistent and Coforge being our current favorite. So we are recommending our clients to add up these stocks to their portfolio on a very decline. From the large cap space, we like Tech Mahindra and TCS in that order. So I think we uphold our view. IT industry and IT sector should be looked upon from at least a 3 to 4 quarter view from here on, and this is a good opportunity. This decline should be taken up as a buying opportunity. Things will settle down. I think Indian foreign ministry is in talks with 18 different countries for a trade deal, so I think this will add up and benefit IT space going forward.
Okay, fair point. I hope this has also helped you out. But let's track the biggest mover today is the real estate pack among sectors. Gaurav, what's happening here on the real estate space? Do you see a continued move here? Is real estate really finding its own way into the markets to find space there for itself in 2026 again?
Yes, some bit of buying was seen of late. I have some of our favorites like DLF, Lodha, Sobha developers. They remain our favorites, and we still keep on suggesting these clients to add up to their portfolios on decline and keep at least a 2 to 3 years type of a view on this, because by very nature what we have observed that they generally perform and go into consolidation that lasts for 3, 4, 5 months and then start performing again. So of late DLF is now performed really well from a bottom of close to 100. It went up to 900, 950 zone, then corrected. Currently it is at a 700 price point. I think this is probably among the best of the lots. The larger, I would say, the largest listed player within this space. So one can consider adding up this stock to a portfolio, because 600 is any which way the stock I don't see falling below that mark.
Okay, fair point then, Gaurav. Thank you so much for being with us on the program, and of course for highlighting for us where the opportunities are currently holding up as far as the upcoming triggers of Q3 business updates and the earnings are concerned. Of course, wish you well for the rest of the week. We'll catch you soon on another edition on Business Today Television to guide further on various aspects in the markets as far as our viewers are concerned. Thank you so much for being with us.
Absolutely. Thank you so much.
Thank you. 26,366 viewers. We're about at 37, 38 points higher in trade. The broader markets are also picking up. A lot of buzzing stocks right now. Don't lose sight of Tourism Finance Corporation, 55 points higher right now. You can actually see a 17% of a rally there. You also have names like Lokesh Machines, that's on the move. Electrotherm, that's on the move. Orient Technologies, that's on the move as well. Look at even Lumax Industries, NetWeb Technologies, even SJV and MIRC Electronics, Swan Defense, Tirupati Forging. A lot of these forging related companies also pulling up in trade. So this broader market move is continuing to hog the limelight today, and it's very, very stock specific moves. Barring IT and oil and gas, rest of the sectors are in the thick of action. Let's see how things pan out as far as the move today is concerned. So stay tuned with us. A lot more coming up on your screens next. Hello and welcome. You're watching Business Today Television. I'm Sakshi Bhatt.